Hi everyone, welcome back to the channel. I want to make this video to take another look at the idea of buying into these cruise stocks. And things like cruise stocks and airlines were pretty popular back in March when everything was shut down. As investors were looking for places to put their money, a lot of investors looked at airlines and cruise lines in particular out of the recovery stocks and said, since the prices of the airline stocks and the cruise line stocks dropped the most, I should buy some of these stocks because the economy will recover and they'll go back up, and therefore I will get the greatest return from these companies since the price dropped the most. And a few months ago when I was seeing all these videos on YouTube, I put out a video saying, wait a minute, it's not that obvious. These recovery stocks, especially capital intensive industries like cruise lines and airlines, there's going to have to be a lot of sacrifices made by these companies just to stay alive. And we're seeing more of that. Today we have some more headlines come out. Royal Caribbean announces pricing a $1 billion in stock and a convertible note offering, and the stock actually edges up. So yesterday, this stock was actually down 13%. So even though there was a slight rebound today, a huge sell-off on this news. And so this is what the company has to do to stay alive, because as we'll get to, they're still not sailing, right? Cruises still aren't going, at least in the United States. And so they have to resort to raising capital through debt and equity just to stay alive. So this is what the company did. They had a 500 million public stock offering where the company's selling over 8 million shares at $60, which is around the market price. And then in addition, there's also 500 million in convertible senior notes due in 2023 that will pay interest of 2.875%. Okay, and so this is a big deal. When you own a stock, dilution and taking on more debt is not really something you want. Taking on debt just to pay off their old debt isn't really something you want, and diluting shares is something you really don't want. And this is no trivial amount too. Just taking a look at, we can take a look at their outstanding shares, and shares outstanding, they have around 200 million shares outstanding. Going back to here, we see that the company is offering to sell 8 million more shares. So this is a 4% dilution of the total share count, which is no trivial amount. That is a big deal. And all in all, what that means is if you own this stock and everything goes back to normal based on 2019 numbers, right, the earnings per share are going to be around 4% lower. But in addition to this, they're also raising money through debt. So they have 500 million convertible senior notes that will pay 2.875% interest. So again, this is another thing that's going to hinder the recovery of this company because their earnings are going to be lower since they're paying interest on this debt. And these are convertible notes, which is sort of like the worst of both worlds, where Royal Caribbean has to pay interest on this, almost 3% interest until 2023. And then at that point, then it becomes stock. So it's almost like you're diluting your shares, but in the meantime, you have to pay interest for the privilege to do that. So again, this news is just another blow to the cruise line stocks. And if you look at the chart, not only Royal Caribbean fell, but also Carnival Cruise Lines and Norwegian Cruise Lines fell on this news because now it's anticipated that these other cruise lines are going to have to do the same thing since cruises still aren't sailing and these companies are burning so much cash, just maintaining their ships. They're going to have to continue this dilution and this taking on of debt, and that really hinders the potential for these companies to recover. Even if tomorrow everything clears back up and we're going back to 2019 numbers in terms of cruises, and these companies are having record earnings, right? The damage has already been done, and it's pretty clear that this might still go on into the future, right? This is the second or third time Royal Caribbean has issued stock in debt since March, and it might not be the last time depending on how much longer cruises are kept closed. All right, so in addition to this, back in March, there was some optimism that, cruises would be shut down for a few months, but then by the end of this year, fourth quarter, cruises would be up and running again. And so that is not the case, where now it's pretty likely that none of the major cruise lines will sail until 2021. So as of right now, the CDC has its no sail order extended until the end of October, and Royal Caribbean and Norwegian Cruise Lines already canceled all their US cruises until early December. So we see the CDC keep extending this no sail order, and I wouldn't be surprised at all if they push it to the end of the year. And I think I saw a report somewhere saying the end of January was what they were pushing for. All right, and just a few days ago, we got the quarter 3 results from Carnival Corporation, Carnival Cruise Lines, and they had very bad numbers in quarter 3 where we saw some huge losses. We can take a look at the income statement where for the quarter they lost almost 1.7 billion, and year to date they've lost almost 4 billion, over 3.9 billion dollars compared to profits in 2019. And so right now Carnival Cruise Lines has around 8.2 billion in liquidity, and their monthly burn rate is 530 million. So every year that goes by where these companies can't sail, Carnival still has expenses of 530 million just to have upkeep and maintenance on their ships. And so that brings you to a point where, depending on if this goes on for 3 or 4 more months, we are likely going to see this company raise some more cash, again, through either diluting their stock or from taking on more debt. Again, either of which is bad for shareholders as it reduces the ownership stake in the business and it reduces your future earnings power, because that debt you're taking on now is essentially borrowing from yourself that you have to pay back at some point in the future, where you're going to be paying interest and then eventually you're going to have to pay off all of the debt. Even some more bad news. So the cruise lines, the airlines, and all these recovery stocks are really dependent on the vaccine for them to come back, right? There's a lot of reports on people not feeling safe doing things like going on cruises if there's not a vaccine. So just a couple days ago, we saw news again that a second vaccine trial paused over unexplained illness. And so this is just even more bad news for the cruise stocks, right? The longer it goes without a vaccine, the more likely that this no sale order will be continued to keep being pushed back and back, which will again have these companies burning cash without any opportunity to make money. All right, and I just wanted to show you this chart because I think it makes up a good point about unnecessary share buyback. So here's a chart of the Carnival Cruise Line shares outstanding all the way going back to 2006 from 2020. And so the thing I want you to notice is that ever since 2015, this company was doing a massive amount of share buybacks, where we saw the share count decrease from, what is it, 780 million all the way down to a low of almost 680 million. And then as everything got shut down, as these companies had to raise cash, we saw that share count swell back up as this company issued new equity to get some cash. And now we see the shares outstanding right back at around 780 billion. So the point I want to make is this company spent a ton of cash buying back stocks since 2015. If you take a look, like I said, they bought back approximately 100 million shares. And here is the share price of Carnival for the last 5 years. If you want to just take an average, we can say rough estimate, their average cost during this time was probably around $50. So if they bought back 100 million shares at approximately $50 each, that's $5 billion that this company spent on share buybacks, right? So not only is that $5 billion essentially wasted, right, not really put to any productive use, we now see the share count back up to right where it was in 2015. So essentially this company spent $5 billion buying back shares, and now they really have nothing to show for it because the shares outstanding right now is the same amount as in 2015. So in a lot of my past videos, I've criticized companies for doing a large amount of share buyback when that cash could be put towards more productive uses, like paying down debt for one easy example. And so in the case of Carnival, right, if they didn't spend that $5 billion buying back stock, yes, their earnings per share might have been slightly lower, but right now in the event where they desperately need cash, they would have $5 billion to keep themselves afloat. They wouldn't have to take on more debt, they wouldn't have to issue more equity, and they'd be in a much better position as a company, and the recovery would go much more smoothly and much quicker if they still have that cash to help them get back on their feet, right? And this is the same thing for the airlines. They spent billions and billions buying back their own stock, and then when the shutdowns hit, they wanted the government to give them a bailout. And so you might be saying, well, yes, they might have spent too much money buying back shares, but who could have predicted that we saw a huge worldwide shutdown where no one went on cruises for almost a year? And that is a fair point, but I would say these CEOs have been in the business for a long time. They know that cruise industries, right, the travel and luxury industry is cyclical, right? A lot of people go traveling when times are good, and when times are bad, when we're in a recession, people cut back on traveling. And so this should be no surprise to the management teams of these companies, right? Shutdown or not, when the next recession happens, travel is going to take a hit. So the management teams knowing that in the future there's going to be a period where there's going to be less demand for travel, we might need to have some extra cash on hand to prepare for that point in time. And so that's why when I look at a stock, this is one of the ways I judge the management team, what their buyback policy is and how they've used buybacks in the past, right? Have they been doing it strategically and only buying back stock when price hits a certain low point and they deem it undervalued? Or is it the type of management that says we're going to allocate so many millions of dollars every year to buying back stock, regardless of what the stock price is, and we're even going to take on debt to do it because the debt is so cheap nowadays, we might as well just take on debt to buy back shares. That is a huge red flag to me, that the management team isn't allocating their capital very efficiently, and they're really setting themselves up for a situation like this, where a company spends $5 billion and now has nothing to show for it. That's just a quick recap of how everything's going in the cruise line and airline space. When everyone was excited about these companies in March, I made a video and I said, maybe they will recover, but I wouldn't be so sure. I think there's potential for these sort of companies to be a value trap where they look cheap, but after all of the share dilution and all of the debt they're taking on, what's left over after this is over probably won't be as much as a lot of people expect. And right now that is playing out, where we've been seeing record amounts of taking on debt and share dilution. So that's just what I wanted to share with you in this video. Let me know in the comments if you still hold any of these cruise line or these airline stocks, and let me know what you're planning on doing with them and if you think a recovery in these type of stocks is close. So if you found value out of this video, hit the like button to help YouTube push out this video to more viewers. And if you're new to the channel, subscribe right now and hit the bell icon to get notified whenever I upload a new video. So that's it for now, and I'll see you next time.